According to market analysts, the development portrays economic optimism, especially to the private sector, that feared that the previous higher government security yields would see banks prioritizing lending to government, given the presumed low risk of dealing with the state.
In the last 4 weeks, we have seen a dramatic turn in yields on government paper. We've seen a fall on the 364 of about 400 basis points, which is a large, considerable decline.
The resultant conducive interest rates environment is expected to significantly reduce the burden of debt servicing by government, but market analysts also believe it might drive government into taking more debt through the issuance of more longer-dated paper and securities. This is worried, though, of the reduction in inflows from investors keen on cashing in on higher yields, which had helped stabilize the shilling against the dollar.
Given our balance of payments, where we are still unfavorable, these flows have been coming in and bridging the gap in terms of funding, temporary funding, that's shortfall. Now, the issue is, as we go forward, with these lower levels of interest rates, the market may not be as attractive for these investors to come through, because for them they are looking at the average of 20s as very attractive. Now that we are going down to 15%, we may not be able to attract as heavy flows as we would have a month ago.
The shilling has since December retained a fairly stable stance against the dollar, comfortably trading below the 3,500 shillings mark, attributable to, among other reasons, the good inflows driven by offshore investors keen on investing on the high-yielding government paper. Overall, though, several factors seem to be favoring Uganda, driving optimism about the continued buoyancy of the economy amidst the recent political associated uncertainties.
The exchange rate has been relatively stable in the last couple of months. We see inflation forecasts, according to the monetary policy statement, somewhat improving. We've seen a narrow sort of reduction in our trade balance on account of international oil prices coming down. Now we see yields on the government paper coming down as well. So the macro scenario looks very interesting and very optimistic.